Hi viewers. Today let's see the case study of MICROMAX, in which let's see the rise and fall of India's biggest mobile phone brand. Before going to this video, I would request you to subscribe 5 Minutes Learning channel in YouTube, and support me to post more such videos. Also by subscribing, you can keep track of my video updates. For your better understanding, I have enabled this video with English subtitles. Now let's move to the topic. Let's see why I have taken MICROMAX as a case study. It is so true about the market, that companies rise and fall in the blink of an eye. At one moment, they are performing well and have captured a significant market share. And then suddenly, they disappear. MICROMAX was the biggest mobile brand in India. 5 years later, its value crashed and market share has decreased. In the year August 2014, MICROMAX became India's biggest mobile phone brand, and 10th largest supplier of mobile phones in the world. In 2015, the Pink Papers reported that MICROMAX founders valued the company at nearly $3.5 billion. 5 years later, in the year August 2019, the Economic Times had reported that company's valuation had fallen 90% from its 2015 peak. This was a shocking huge fall for a company who was credited with recognition in successfully tapping the India's inexpensive smartphone market segment. Today in this case study, let's see how did MICROMAX go from popular to non-existence in a span of few years. MICROMAX was founded in the year 1991, by Rajesh Agarwal. It was originally formed to supply computer hardware to companies like Dell, HP and Sony. In 1999, Rahul Sharma joined MICROMAX. One of their first contracts was a partnership with Nokia, and started manufacturing wireless public phones which used SIM cards. Soon afterwards, Nokia departed from this business. MICROMAX continued the business, and grew their profits to several-fold. Once when Rahul was passing through rural Bengal, he witnessed a public telephone office, which had been powered by using the battery from a truck. Sharma could not understand how the villagers managed to charge the battery without access to any electricity. The truck driver later revealed that he actually earned his living by driving the battery to another nearby village, charging it overnight, and then bringing it back again the next morning. Sharma was amazed at this, and started to understand the benefits of a battery-powered portable phone. He convinced his partners that it was the right time for MICROMAX to venture into the mobile phone industry. He realized that market needed a low-budget phone, which had a long battery life. MICROMAX launched its first mobile phone, the MICROMAX X1i. This phone offered a 30-day battery life, and became a huge hit across the India in 2008. Within 2 years, MICROMAX had increased its market share from 0.6% to over 5%. From 2008 onwards, the company increased exponentially. From a 10 crore yearly business, it grew to a 100 crore yearly business in the span of a few months. Soon after, with the introduction of the Android software, MICROMAX launched its Android-powered smartphone, the MICROMAX A60. By 2015, MICROMAX was the second largest smartphone company in India, after Samsung. By this time, the company had captured over 16% of the market. Let's dive deep into the reasons why MICROMAX failed. The Indian brands did not plan for the arrival of Jio. Jio came in and gave free phone connections with unlimited 4G data, and suddenly everyone started to use Jio. Before Jio, the majority of the population did not have access to mobile data. So, when Jio was launched, the entire approach to the use of mobile data changed completely. Within a very short period of time, most people shifted to Jio. As a result, MICROMAX users started shifting to other companies, which offered 4G phones in the same price range. By the time MICROMAX realized what the problem was, they already had a significant inventory of the older 3G phones. They used to buy one shipment, sell that, and use the profits to buy the next shipment. So they got stuck with a huge bunch of 3G handsets that they couldn't sell in India. Thus, they missed the signs of upgrade to 4G and lagged behind. It was not possible to dump the entire inventory and newly manufacture 4G phones. Therefore, MICROMAX started losing its market share. By 2016, the market share had fallen to 9%, and by 2018, they only had 3.4% of the market. MICROMAX took inspiration from Chinese companies to manufacture their designs and equipment. Soon, however, Chinese companies like Oppo, Xiaomi, Vivo, and Xiaomi realized the opportunity of huge consumer base in India, so they decided that it was time to enter into Indian market. These companies studied the market and identified the point of entry as the offline retailers. These companies provided huge incentives to retailers in order to promote their products. MICROMAX managed to hold on against its Chinese competitors, because of its huge network in India. They used to manufacture domestically, and had existing factories and assembly lines across the country. This is where they found an edge over the other companies. After Make in India campaign came, the Chinese companies took inspiration, and started assembling their products in India too. This nullified the comparative advantage that MICROMAX enjoyed, and put them on equal grounds again. Even today, market leader Xiaomi has localized a lot of the components that go into its phones, like batteries, box, connectors and cables. But most of the complex work continues to be done back home in China. The primary focus of technology companies should always be on the development of products. In order to do this, you need to invest in research and development, rather than just focusing on production and marketing. The Chinese companies were experts in both hardware and software. They proved that it is possible to offer high-quality product with all the latest features at an affordable price. These companies focused on innovation and product development along with marketing, and developed superior products. MICROMAX, on the other hand, MICROMAX did little innovation. They always focused on quantity over quality. Most of their smartphones were of average quality. They also compromised on memory space and performance in order to maintain a low price. Once people realized that there were other options out there, which offered them a better product at the same price, they switched over to those companies. MICROMAX thus lost out on market share. First, when Samsung toppled Nokia in India, they marketed their product aggressively, reportedly paid 12% commission to retailer. MICROMAX also started doing the same. But Oppo and Vivo paid 18% and also incentives to put their banner in stores. Retailers started pushing these brands to customers. Second, MICROMAX competed in 5,000 to 10,000 price category. This category has cutthroat competition, so they get little profit. They never tried to be in premium phone market, which is also most profitable segment. When Chinese brand was cutting cost by going online and flash sale. Third, India is a selfie-crazy nation. In 2014, world's 60% death related to selfie happened in India. Oppo and Vivo advertise their phone as selfie phone. The Indian brands missed on this. Fourth, MICROMAX tried to raise money. Alibaba offered to buy 25% stakes for $1 billion. But soon both cancelled the deal, as Alibaba want controlling stakes to push its own OS, which MICROMAX rejected. It is fact that a successful business has to have a significant comparative advantage, in order to survive in the long run. MICROMAX's only comparative advantage was its low price. Without any real advantage, in terms of product quality and innovation, MICROMAX's short-lived flame of success had soon been extinguished. Let this be a tale of caution. The story of MICROMAX proves that, no matter how smartly you market your products, quality always wins in the long run. By 2019, the annual revenue earned by MICROMAX was below Rs. 3,000 crore. Thank you all for watching this video. If you have not subscribed yet, please support me by subscribing 5 Minutes Learning channel in YouTube. To keep in track of my new video updates,